Trajectory of the economic recovery will continue to make backward-looking metrics less relevant for the forward-looking market. That is not my Goldman Sachs voice. And Bank of America Securities warning that a blowout quarter does not mean a blowout market. Here now to discuss all of this and get some stock picks for you, Dan Genter, CEO and CIO of RNC Genter Capital Management, and Katie Nixon, CIO of Northern Trust Wealth Management. Katie, I'll start with you, and I don't want to blow our corporate coverage at CNBC out of the water for the next 3 weeks, because we're going to talk a lot about earnings over the next 3 weeks, and some certainly, the Teslas, the Apples, they're going to matter like they always do. But as a whole, how much more will the guidance matter versus the backward-looking numbers this quarter?
Well, Brian, thanks for having me. And I couldn't agree more with your premise here that the guidance is going to matter quite a bit. And it's not just guidance on the top line, on the growth outlook, but it's guidance on margins. We've heard a lot over the last couple of weeks about inflation pressures, supply chain issues, being perhaps a dampener on margins. So I think it'll be really important to hear from companies about their forecast for how transient some of these pressures may be.
Yeah, Dan, because a lot of these companies, and I think I'm going to use the official word here, are going to have to guess, right? I mean, we've heard this from many companies. Corporate visibility into the next 3 to 6 months or year is hard because and there's parts of the country that are wide open. We know that. There's people here that are, we're still not. So these companies are really going to have to kind of take a shot in the dark even on their guidance.
Well, I think that you're right, Brian. And the good news is that the company managements for especially these large public companies are very experienced. Again, it's not the first time they've dealt with difficult times, even though this might be unprecedented. And so I think that what we're getting in guidance, as Katie mentioned, is that we've been given very conservative guidance by companies because they know how devastating it's going to be, especially at this level of multiples for the market, to miss and to disappoint. So we think that we're actually going to have a good earnings season. Certainly there might be some notable misses, but for the most part, people have been so conservative. We think the top line will be good. We'll start to see some expansion in margins. And clearly, from a pricing standpoint in the market, we just being turbocharged, in essence, by this life preserver that we have in overall stimulus that's going to continue. So even though we're concerned about the multiples, we feel the earnings are going to continue to go forward, and again, we're going to have that support base, and that the market will continue to be at these reasonable levels unless we get a break in earnings. Then we're going to have to deal with it.
Shepard Smith here. Thanks for watching CNBC on YouTube.